Hello guys, have you ever wondered what was long wicks on candlesticks actually mean? In this video I'm going to show you how understanding these hidden signals can completely transform your trading strategy. Stick with me, and by the end of this video you will be reading charts like me on this example, where you can make a good deals like that with all the information what I'm going to say you next. And don't forget to subscribe my Telegram channel, where I write my thoughts on the market, useful information about trading, and post my trades. Have fun watching. Candlesticks show the price movement over a specific period of time. The shadows or wick reflect the maximum and minimum values what the price reached during that period. Long shadows can indicate the presence of strong buying or selling pressure, and if you learn to read them correctly, you can anticipate reversals and trend continuation. So let's move quickly. The wicks are existed in two types, not in our things or strategies, only these two types, because here we can see two ways: capturing of liquidity and not capturing of liquidity, but on which you could open a good deal. For example, in this situation we have 1 week what are captured all the liquidity behind and testing our point of interest zone. For example, here we can as a FG or order block and our themes, and after testing 1 week what are already tested our previous point of interest, you can open a deal, because it is a good factor for a continue of movement, because it has already get a reaction from our previous point of view. And of course you need to wait for the breakout structure, and only after that we are waiting for retest of this zone and opening a good deal. You need to see 50% of this week to open a deal with conservative stop loss and good risk ratio, but not in all situations the price are gonna hit our 50%, for example like in this situation. And the best way and 100% entering the trade is opening from the beginning, but risk ratio are gonna be not good as from 50% of your week. And of course I prefer use this type of week because it has one more good confirmative thing, is capturing the liquidity below, and it is good indicator for entering the deal and good indicator for reversing of price in your way. And another type of week, it's the same as in the previous example. It's already tested our point of interest, but it don't get any liquidity, and it is more riskier to enter from it, as I said before about liquidity. And you can mention, but it is looks similar like order block, and you can be true because it's our order block on the higher time frames. And if you mention it, write it in the comments and I will like your comment. In the second week type, you also need to wait for the breakout structure, like that, confirmation it on the lower time frames, waiting it for test point of interest, and only after that you can enter the trade. The bearish movement looks the exact way because the market are fractal and it works on the reactive on every time frame, every movement. So let's move to the examples to see what mistakes you can do and how to open the deals with this weak formation. For example, in this situation we have our weak what are capturing the liquidity behind, but it's not a good meanings of liquidity, so it's gonna be the second type of week. It tested our point of interest zone, our 3G, and after the test of this week you can open a good deal with conservative stop loss below it and a good risk reward ratio for capturing this liquidity and get a good deal like that. And of course here we need to mention our breakout structure here, what confirm it our good deal. And if you don't show in your deal, you need to fix it by part. With another example, here we can see is the first type of wick, which are captured all the liquidity behind it, so it's gonna be the first type. And after the breaking of structure here, forming it here, you can open a good deal for the beginning of it with conservative stop loss and for capturing this liquidity and get a good deal just one day. And now I'm gonna show you the example of a bad deal, because here we are mentioned our wick what are captured all liquidity on the left side, but and retested, and it's retested the second time. It's touch our point of interest here, and after that you can open a deal with short meanings like that. So I'm bragging here, and it's a good deal because the week touch our point of interest, captured the whole liquidity on the left side, and after that we tested the second time and it has a good breakout structure here. But after that the price went to bearish movement, but on the this side you can say the perfect movement of structure, and this deal are gonna be only on your risk. It's 50-50, and I don't really recommend you to open the deals like that. So in this example we has order block the week which are format and captured all liquidity, and after that it's retested, what help us to open a good short deal, for example like that, and get a good revenue. Make a stop of this video and determine by yourself all the vehicle structure and overall movement of chart. So here we can see one break of structure, another break of structure, here we don't have it, and after that, after capturing of this liquidity and breaking of structure, if you are not 100% sure in this deal, what I opened before, you can open it from this candle because of the breaking structure and test it out. Previous point of interest is gonna be like that. It will be less risky but less profit. So thank you guys for watching. Follow my Telegram channel where I'm gonna drop all the materials from these lessons and previous lessons. Drop the likes, write your comments about my videos. See you the next day. Goodbye.